One Up on Wall Street Part 1. The Common Person's Hidden Edge. A man is standing in a supermarket. In his hand, there is no annual report, no expensive terminal, no secret data from Wall Street. He is simply observing which product people are picking up again and again. At that very moment, experts sitting in a New York office are looking at complex charts, predicting the future, and that very company is being missed by their eyes. The question is, who had the real edge? This is the most interesting doorway to Peter Lynch's story. He says that many times a common person spots a winning company before a professional investor, because he looks at real life, not at the market. But then the fear begins. If the common person has such a huge advantage, then why is that same common person most afraid of the stock market? Is the problem one of knowledge or of confidence? Is the market really a gambling table, or have we misunderstood it by looking from a distance? Peter Lynch's book One Up on Wall Street breaks this very confusion. This book is not just a guide to buying stocks, rather it explains that investing begins not with a screen, but with observation. Peter Lynch was no random investor. He managed the Fidelity Magellan Fund from 1977 to 1990, and his performance made him legendary in the investing world. But the twist is that Lynch's thinking did not start with any complicated formula. His journey began with an ordinary childhood, family struggle, and a small job on a golf course. His family had seen the pain of the Great Depression. In that era, the stock market seemed to people not like a place to build wealth, but a place to lose wealth. Talking about stocks at home was almost like a fear, like something where even before going near it, a person begins to feel he has lost his money. Peter Lynch's grandfather had invested in a company named City Service. He thought it was a water utility company, but later found out that it was linked to the oil business. In confusion, he sold the shares. And after some time, that very stock went up many times over. This small decision became a big lesson for the coming generation. The image of the stock market was built in this very way in many families. Someone sold at the wrong time, someone bought without understanding, and the story became that the market is dangerous. But the biggest shock in Lynch's life came when he was just 10 years old, and his father died of brain cancer. Now the responsibility of the home fell on his mother. Childhood suddenly grew up fast, and Lynch started working at a young age. He became a caddy, carrying players' bags on the golf course, walking with them, handling small needs. From the outside, this was a simple job, but his investing education started right here. Because the people coming to the golf course were not ordinary. Businessmen, executives, and successful investors came there, who talked about stocks in casual conversations. Lynch kept listening. Gradually, he realized that the stock market is not just another name for fear. Some people, by understanding it, were building wealth too. Here comes the first pattern interrupt. To learn investing, Lynch was sitting not in a classroom but on a golf course. A book was not open, but the world was opening up. Lynch liked the arts more than science. Maths, accounting, and business subjects were not his favorites. Hearing this, anyone could say that he was not made for investing at all. But Lynch's belief was different. Investing is not just a science of numbers, it is also an art of human behavior, business understanding, and imagination. Because behind a stock price, there is not just a balance sheet. Behind it is the customer's mood, product demand, management's thinking, and society's changing taste. In 1963, Lynch bought his first stock, Flying Tiger Airlines. At that time, the share price was around $7. He had not chosen this company through any magic tip. He had read an article that had optimism regarding the future of the freight business. But the real twist was that the stock did not go up just because of the article. During the Vietnam War, cargo movement increased and the company received an unexpected benefit. Meaning his first success was not entirely genius. There was observation in it, but there was also luck. And this very honesty makes Lynch interesting. He does not present the market as if every victory comes only from intelligence. He explains that it is necessary for an investor to understand the difference between luck and skill. After Boston College, he got a summer job at Fidelity. His work was to research companies and write reports. Right here, he saw the world of professional investing from the inside for the first time. But as much as he was learning, an uncomfortable truth was coming forward just as much. The theories that were taught in college, the real market often did not behave like that. The formula was clear, but business was messy. At Wharton, he got statistics and advanced calculations. At Fidelity, he saw real companies, real products, and real decisions. And this very contrast built a big belief inside Lynch. In investing, theory alone is not enough. ground reality is just as necessary. This is the reason why the core message of One Up on Wall Street is so powerful. Lynch says that the common person also has an edge, he just doesn't recognize it. You go to a mall, you see a crowd at a restaurant, you see the popularity of a brand, you see a product reaching every home. All of this is market research. But the common investor ignores these signals. He thinks that until a TV expert speaks the name, the company is not important. And this is the biggest illusion. Many times Wall Street notices a company when customers have already given it a place in their lives. Lynch connects this advantage with the thinking of invest in what you know. But this does not mean blindly buying your favorite brand. Here the myth breaks. If you like a product, that is only a starting point. The final decision has to be taken only after looking at the quality of the business. Because a good product is not always a good stock. And a popular company is not always an investment at the right price. This is the place where common sense and discipline come together. First notice the company in real life, then confirm with numbers and the business model. Lynch explains that experts too are late many times. Big institutions cannot buy small, ignored and boring companies quickly, because their size makes them slow. But the individual investor is small, so he is flexible. He can spot a small company when the market is not taking it seriously yet. This is the real meaning of One Up. The common investor is not above Wall Street because he is smarter, but because he can see first. But there is danger here as well. If observation is mistaken for research, the investor can get trapped. Buying a stock by looking at a crowd and buying by understanding the business are two different things. Lynch therefore explains companies in categories. Thinking like slow growers, stalwarts, fast growers, cyclicals, turnarounds and asset plays deepens the story further later on. In part 1, the real foundation is that the investor understands himself first. Will he sell in fear? Will he buy in hype? Can he keep patience? Because in the market, the biggest enemy is not always the competition. Many times the investor's own mind becomes the most expensive broker. When the price drops, that same company suddenly starts looking bad. When the price rises, that same company starts looking like a genius. Lynch's approach catches this emotion. He says, look at the business, not at the stock ticker. Price makes noise, business speaks quietly. But things that speak quietly are often the real ones. Factory, store, product, customer loyalty, debt, profit, expansion, management, all of these together make a story. This book gives confidence to the common investor for this reason, because it takes investing out of scary language and brings it into the language of daily life. You don't need a finance degree, but you need curiosity. You don't need a Wall Street office, but you need the habit of asking questions. How does the company earn money? Why do customers come back? Is growth real or temporary? Is debt manageable or a danger sign? These questions don't seem difficult, but these very questions can save many people from losses. And these very questions can lead to many hidden winners. Peter Lynch's story itself is proof that the path of investing does not start from a perfect background. Sometimes it starts from doubt, struggle, and small observations. His childhood did not pass in financial comfort. There was no market confidence in his house. Still, that same person was included among the world's most respected stock pickers. The bigger lesson than this is that the entry ticket in the market is not a degree. The entry ticket is honest learning and the courage to look at one's own mistake. But here is another twist. Lynch empowers the common person, but also saves him from overconfidence. He does not say that every investor will beat the professional. He says that if you connect real-life signals with research, then you have a chance. A chance is not a guarantee. A chance only opens the door. After going inside, patience, analysis, and temperament alone save you. This is the most satisfying thing about part 1. The stock market is not a closed room where only experts wearing suits can go. It is an open field where a school teacher, doctor, shopkeeper, homemaker, or entrepreneur can also make smart decisions by understanding the business. But a smart decision does not begin with a stock tip. The start happens with the question, the company that I am looking at, do I really understand it? If the answer is no, then stopping is intelligence too. Because in the market, money is not made only by the person who takes action all the time. Many times money is saved by the person who can sit quietly amid excitement. And this very sitting quiet feels hardest to a new investor. In Peter Lynch's world, investing is not boring. It is like a detective story, where clues are hidden in stores, in products, in customers, and in the changing habits of society. But not every clue is correct. Some clues are traps, some trends are temporary, and some companies are shiny from the outside but weak on the inside. From right here starts the need for part 2. Because observation is only the first step, the real test comes when we have to combine the company's story and numbers. Part 1 stops after teaching us this much, that the common person is not helpless. He is not a spectator standing outside the market in fear, but can become a participant who goes inside and understands. But now the question has become even bigger. If investment ideas are hidden right around us, then how to turn them into the right stock? Which company is merely popular and which is truly a powerful business? Which stock is temporary excitement and which can become a long-term wealth machine? In part 2, the story will move forward from this very turn. There we will see how Peter Lynch used to classify ordinary companies, which stocks quietly become multi-baggers, and which shiny names teach an investor the most expensive lesson.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.